It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, talking property news as we do 7 days a week, as heard just after 6 a.m. and heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Tell you what, the week is starting to fly by, up to a Thursday morning already, July the 11th. And you might have seen or heard this reported earlier in the week by Domain, that Australia's top economic forecasters are anticipating that the Reserve Bank will start cutting interest rates by March of next year, reducing the cash rate by 0.35% by June. Now, the panel of 29 forecasters assembled by The Conversation predicts an additional cut of 0.3 points by the end of 2025. This would bring the cash rate down from the current 4.35% to 3.75%, resulting in a total reduction. And this is the best part of this, isn't it, when you start to hear the reduction of how much less you will be paying. A total reduction of $335 in monthly mortgage repayments for a $600,000 loan. That is obviously some of the good news to look forward to. Right now, let's catch up with Matthew Hughes, the Managing Director of Capital Property Advisory there in Perth. And good morning to you, Matthew. Welcome back to Australian soil after jetting around Europe. How was it?
It was amazing. We did 9 cities in about 30 days with a 2 and a 4-year-old. So a lot of travel, a lot of commuting. We crammed a lot in, but it was the trip of a lifetime. We couldn't have enjoyed it more. And then we finished in Dubai after Europe for about 4 nights and just had a slower paced few days before we got home, which was a nice way to finish.
Hey, I've got to ask you, so many people these days, they head off to Europe and you can set yourself a budget. People that I know that have headed off for holidays, particularly to Europe, they just crash over and above that budget. Is that what happened with you?
Yeah, look, we did pretty well with all the pre-planned stuff in terms of accommodation and all the flights and everything else. But a lot of things that I didn't expect when we got there. So we were traveling with 5 people most of the time because we took a nanny with us to help with the kids. And so then we needed a van for all of our luggage and enough seats. And just on car transfers from airports, train stations and so forth, we might have spent $4,000 or $5,000 there. So that wasn't factored in, and they were expensive. Like the vehicle transfers and the Ubers in Europe, I thought were really quite expensive. And then obviously throughout Europe, wining and dining and everything else, it is pretty expensive. It's a pretty tough place to try and do a cheap holiday if you enjoy nice food and nice wine.
Yeah, so in terms of the food, is that the area that you really noticed that you were spending some good coin on?
Yes, but to be fair, like my wife and I really love fine dining restaurants. And so we were choosing to spend a fair bit in a number of places. But even when we wanted to just go and have a family meal and some pretty normal type food, it was still reasonably expensive. The one thing that we did find, though, is local wine in Italy or local wine in France or champagne in France was very reasonably priced compared to Australia. And then certainly compared to Dubai when we got there, we saw a bottle of champagne in France for $100 and then saw it on a wine list in a restaurant in Dubai for $600, the same one. I'm sure there's ways to do it a little bit cheaper. And we tried to do that on occasion. But yeah, it was a pretty elaborate once in a lifetime trip for us. So we didn't hold back too much.
Oh, great stuff. All right. Well, since you've been away on holiday, the Perth property market has been, as usual, making plenty of news. Some of it talking about the slowdown in Perth again. And no doubt you've got some thoughts around that.
I think you know what those thoughts are, Craig. Pretty similar to the last time we discussed this. So I stayed plugged into the market and the news while I was away. I tried not to do too much work, but I did see a few articles from the same old East Coast sources citing a slowdown in Perth. And then a couple of days ago, we see that CoreLogic reports that we did another 2% growth in June, pretty much on track with the last few months. So there's certainly no slowdown in the rate of growth. Stock levels have dropped again since I left, which is not music to my ears as a buyer's agent. We're just over 3,000 properties on the market now, and it's threatening to drop below 3,000 at the rate that we're trending. And the transaction levels that these East Coast so-called Perth experts are talking about dropping have increased since I left. So there was nearly 1,100 sales last week alone. Compare that to this time last year, it was only 839. So over the year it's increased, and over the month since I was away it's increased. So I'm really quite baffled as to where they get their data from, and also wondering what their motives are in terms of trying to divert attention away from Perth and probably get more buyers back into their own investment markets is probably my initial thought.
Some mixed messaging, shall we say, with some of the reporting on the Perth real estate market. What about new construction? That's always obviously a great subject to talk about. No doubt you've been keeping pace of this, as you say, since you've been gone. How positive is this space at the moment?
There's been improvement. So look, the numbers are still languishing well below where they need to be in terms of new dwelling approvals, but we led the country by a long way with an increase of nearly 20% on the new dwelling approval statistics in May. So there's a bit of a lag on these stats. We don't have June yet. So that's obviously great news for our starving property market. But that new product, as you know, is not going to come to fruition for at least a couple of years, maybe longer. And it's barely a dent in what's required to bring balance back to our market. So great to see it trending in the right direction. It's something that we've been predicting and talking about recently in terms of the established prices have gotten so high that it's starting to make more sense to look at building again. But the concern that I outlined previously, and I'm starting to see some headwinds for, is that with this increased demand, what is that going to do to our already undersupplied labour force? And we're already seeing what's happening in that space. And we've got concerns about material and labour cost increases, and more importantly, timeframes blowing out again. If there is a drop on the interest rates, that will help. But if not, we might find ourselves in the same scenario again soon, where that appetite for construction disappears because costs are spiralling and timeframes are spiralling.
Yeah, well, we talked about that a few months ago. Now, have you seen any evidence of that so far?
I have, yeah, anecdotal at this stage, but one of the first people I called when I got off the plane was my builder, because as you know, we're starting soon, hopefully, on our new home. And his comments were really reflecting what I've just sort of outlined, that he's already seeing the impact on some of the early stage trades who, for the last year or so, concreters and bricklayers have become more available. Prices have normalised to a degree. Certainly they're not increasing like they were. We're actually increasing at a lower rate than anywhere else in the country. But he has indicated that he's starting to see some small cost increases creeping through on materials, and lessened ability to be able to schedule some of these early trades who were quite free for the last 12 months. So that's not a great sign for anyone thinking about building, myself included. So we'll have to see what impact that has. I would imagine that he's already talking about, instead of 15 months from slab for my two-storey home, now possibly 17, 18. So that's not news I wanted to hear, and it's something that's obviously going to filter through the market as well.
All right, and we will come back. We will talk more property from Perth in just a moment with Matthew Hughes, freshly back from his European trip, and we'll do that next.
From interest rates rising, a shifting landscape, rentals running hot, clearance rates, a tight rental market, we cover it all every morning from 6 a.m. on the Real Estate Breakfast.
Well, since we are in Perth, I see that an agent has put on a gas mask to showcase a renovation-ready Perth property home with bubble wrap on the ceiling and a checkered past. I wonder what they've been cooking in this home. From the outside, all seems well and good, but the video reveals the real estate agent masked up, setting the tone for the property. The Armadale house comes with various belongings left by previous occupants and a history of suspicious activity. The Armadale home is described as a reno roll your sleeves up proposition. So good luck, I guess, if you're looking at that property in Armadale today.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week, only on the Real Estate Podcast.
It is a Real Estate Thursday and we are talking all things property there in Perth, and we are with Matthew Hughes. Now, what about the state or federal government doing anything to combat some of those issues that you're talking about?
Yeah, there's been some movement there in policy, and I have seen some policies that are being created to help address some of these concerns. But as usual with government, it's a little bit too little too late, in my opinion. They've introduced some incentives for developers to create new stock, but in reality, they don't amount to much in terms of the scale of these sorts of projects, in terms of what the government's actually incentivising. And they're working to bring more social and affordable housing to market as well, but that's a slow burn. I don't expect it to have much of an impact in the short term. There was one policy that I saw announced whilst I was away in terms of a state and federal government agreement to allow 10,000 more overseas skilled workers into WA. So that sounds like good news on the surface, and that can help address the crippling labour shortages that we've had. But a lot of these immigrants, and I'm hopeful that a lot of these immigrants are going to fill trade roles in the building industry. I think they will. But when you realise that they also need somewhere to live, then the solution becomes part of the problem, and you're looking down the barrel of a problem that just doesn't seem to want to go away.
Indeed. And we should talk about the rental market, of course, such a big issue right now, right across Australia at the moment. Is there any positivity in the market that you can see?
Yes, let's finish on a high note. So I saw this trending before I went away. Over the last few months, we have seen a jump in the number of properties available for rent, which is great to see. It happened quite quickly, to the point where we had to quickly adjust some of the pricing on some of our rental properties for our clients, because we've been chasing top dollar for so long. And then all of a sudden, additional supply came in and people were going out and viewing 3 or 4 options as opposed to coming in hat in hand saying, please, can I have your property? There was a pretty quick change there. So the vacancy rate has increased a little bit, but it's still at very low levels. Again, this is not a complete solution, but it has just taken the pressure out of that rental market a little bit. It has resulted in our rental median price stagnating at $650 a week for the past few months, which is good, that it's not increasing and putting more pressure on vulnerable populations. So some good news there, but it remains to be seen whether that's an ongoing trend or whether it's just an anomaly with a bit of stock coming in and it's going to be soaked up and we'll be back to where we started again. So the next few months will tell us that.
Okay, all right. Well, we'll leave it there. Always great to do the catch-up with you there in Perth. You've done pretty well because you've got through to Thursday, and probably the toughest week after coming back from your Euro trip. Enjoy your Thursday, and thanks for coming on to the Real Estate Breakfast.
Great to chat, Craig.
From buying strategies, a fluctuating market, the importance of data, geographical differences, confidence in the market, rental yields. Stay informed every morning from 6 a.m.
Arrears have risen over the past few quarters, really since the June quarter of 2022 when interest rates were starting to rise. But it's worth noting, even with an increase in the rate of arrears, it's still very small overall.
Australian dwellings. Let's talk about the values, which of course increased a further 0.7% in June, taking growth to 8% across the financial 2023 and 24 year. Now, this is the equivalent of around $59,000 you guys have reported on.
What we're finding is that about 70% of the growth in home values in the combined capital cities for the month of June was driven by Brisbane, Perth and Adelaide. But what that suggests is that in a high interest rate environment especially, where borrowing capacity is limited, people who want to buy property are being skewed to the more affordable markets.
We connect you to the best real estate information across Australia. The Real Estate Podcast.